Hey, good morning, my fellow wealth creators. I'm here again for the third episode in our financial independence series. Today, it's all about saving with strategy. I'm talking about saving as a purposeful action that supports your future wealth goals. So if you're catching me live, say hello in the comments. I'd love to say hi back. And if you're watching the replay, remember to comment #replay so I can give you a shout out later. And for those who don't know me and joining for the first time and you missed the earlier episodes in the series, you can find them if you just scroll up on my page, whether it's Facebook or LinkedIn. I record every Tuesday and you'll see them on every Tuesday, a live video. You can just watch those. And again, introducing myself, I'm a former accountant with 30 years of crunching numbers. Yes, 30 years. I know I look young, but 30 years indeed. And now I help Generation X and a few outside the bracket fast track their financial independence and their financial freedom through the magical world of digital entrepreneurship. So what are we waiting for? Let's get started. Before I start, I want to make it clear that I'm not a financial advisor, not offering financial advice, but purely providing financial education so that we can become financially literate and make good choices. Gone are the days of just saving cash in a traditional account. You can do that, but we now have tools and platforms that allow us to make savings an active, growing process, one that's aligned with our wealth building goals. I'm going to share some options, which does include some traditional mainstream, but some are not. And the first I'm going to cover is high yield. Well, high yield accounts are, you can get some mainstream high yield accounts, of course, that will lock away your funds for a period of time and give you a higher yield than what you get in an account that's readily, easily accessible. But there are digital savings accounts. So you can find high yield saving accounts online or even digital first accounts with better interest rates than what you get in your local building society or your local bank. And by shifting your money from traditional banks to higher yield digital accounts, you can make it work harder for you over time. Again, do seek professional advice before you make these decisions if you need to. There's also automated saving opportunities for consistency. Setting up automated savings is now one of the easiest ways to ensure your savings grow, because then you don't have to remember to do it. It happens every single month on autopilot. And many apps now offer this feature to round up your purchases or even allocate a percentage of your income into a savings or investment account. So you're saving without even thinking about it. And that really is a good idea. So you don't have to remember this month I've got to press this button, this month I have to do this. The apps now do it for you. And these roundups may not be significant on their own. Over time, these amounts add up. It doesn't have to be big. Just start wherever you're at. And that at least you're starting and not thinking that, well, I have to have X amount before I can begin saving. You can start wherever you're at. Start at your, where you are at today. Just start with an amount that you can afford. There are digital investment accounts for growing your savings. There are low-risk digital assets such as bonds or ETFs. These are available on digital investment platforms. And a lot of these things now are available through mainstream banking apps as well. And they do offer an alternative to just having your cash sitting in a ISA or just sitting in your savings account. Many mainstream banks do offer alternative ETFs or bonds. And this allows you to take advantage of the compounding effect, letting your savings grow faster than they would in a traditional account. Now, I also have a fondness for digital assets. These can be blockchain and AI technology-based investment vehicles. These vehicles can offer far better returns than mainstream. But again, I would stress, never do so without due diligence and without the appropriate and proper education. So can I ask the question, how do you save? Is there a digital saving strategy you've tried or want to learn more about? So if you want to learn more, by the way, you can access my website, which is just above here on the left-hand side, or is it above there? I think I'm pointing to the right, pointing in the right direction. Let's have a look. It's that way there. You can access that, but don't forget, let me hear your thoughts in the comments, and don't forget to give this a thumbs up if saving smart sounds good to you. And if you're not following yet, do hit that follow and subscribe button, because in our final session, we'll explore how to protect and keep the wealth that you've built over time. And that really is important. So thanks for joining, and I'll end with saying happy saving. Take care until next time.